Good evening. It's Thursday, the 30th of July, and here's the day done by dark. Tonight, 4 numbers landed inside 90 minutes and pointed 4 different ways. Growth came in at half the expected pace. Household demand more than doubled its pace. Inflation actually fell, and the bond market, which normally likes exactly that, sold off anyway. Here's how they fit together. The Commerce Department's first estimate of spring growth came in at 1.5%, annualized. Forecasters expected closer to 2.1. A clear miss, and all day it has been reported as a slowdown. It is a slowdown. It is just not a slowdown in the part most people mean. Underneath it sits the measure economists watch, because it strips out the noisy pieces, households and businesses buying things without trade or government. That rose 3.9%, up from 1.7. Private demand more than doubled its pace in the quarter, the headline halved. One note, because it is being reported the other way, tonight. You will read that growth slowed because of tariffs and the war. The Bureau of Economic Analysis does not say that. Its release does not discuss tariffs at all. That framing may prove right, but it is interpretation, not what the agency published. The second number came from the same agency 90 minutes later. Consumer prices, measured the way the Federal Reserve prefers, fell in June, down 0.1%. Year over year, 3.7. Setting aside food and energy, 3.3 and falling. That is the direction the Fed has been waiting for since it held rates steady on Wednesday. But look at how the spending got paid for. Incomes rose 0.2%. Spending rose 0.3. The saving rate is 2.7%. Households are running slightly ahead of their paychecks. Growth soft, inflation cooling, consumers stretched. Those normally pull long-term interest rates down. The 30-year Treasury yield went up instead, finishing near 5.25%, the highest in decades. That is tonight's real signal. The bond market was handed good inflation news and declined to celebrate. Lenders of 30-year money are pricing something the monthly data has not shown yet. The stock market had a very different reaction, and nearly all of it came from one company. Microsoft rose 15.5%, its best day since 2008, after telling investors its cloud business is growing faster than expected. That added roughly $450 billion in a single session, the largest one-day gain any company has ever posted, passing a record NVIDIA set last year. Meta, which reported the same afternoon, fell about 8%. 2 companies spending on the same thing moved opposite ways on the same day. Microsoft showed revenue arriving, Meta showed spending rising and cash flow falling. Investors have stopped paying for the promise of artificial intelligence and started asking who is being paid for it. One caution. Wednesday, these indexes had their worst day in more than a year. Tonight, the S&P and the NASDAQ have more than made it back. The Dow, only a little over half. Apple and Amazon reported after the close. Apple had its strongest spring quarter ever. Revenue up 16%. Earnings per share up 29%, with records for iPhone, Mac, and services. And here is the detail worth the segment. Its gross margin was 50.1%, and the company says about 2 points of that came from tariff refunds. Money paid on imports, given back. On the day the coverage blamed tariffs for slow growth, the only tariff figure published with a number attached was a refund that made a company's quarter better. That is not a rebuttal. It is a reminder of how partial the evidence still is. Amazon crossed $200 billion in quarterly sales for the first time. But of its $62 billion in reported profit, $53 billion came, in the company's own words, primarily from the rising value of its stake in the artificial intelligence firm Anthropic. Strip that out and it is still a good quarter, a different one than the headline suggests. Politico reported today, citing more than 150 pages of documents, that the president personally overruled his own agencies to deny disaster aid to 4 states led by Democrats after February's record blizzard. In each case, the Emergency Management Agency had validated the damage and recommended approval. Rhode Island documented 9 times its federal threshold. New Jersey documented more than 4 times. The White House says there is no politicization in the president's disaster decisions. The emergency agency says federal help is reserved for what it called truly extraordinary events. We are reporting what the documents show and what both sides said about them. The Africa Centers for Disease Control said today that the Ebola outbreak in the Democratic Republic of the Congo has killed more than 1,500 people out of roughly 3,400 recorded cases. Nearly 90% are in the remote eastern province of Ituri, though it has reached 5 more provinces. It was declared in mid-May. It reached that toll in about 2.5 months. The West Africa epidemic of 2014, the one most people remember, took roughly 8 months to reach 1,000. It is killing faster than any Ebola outbreak on record and getting a fraction of the attention. Elsewhere today, rain finally reached the fire zone in southwestern France, and Spain lifted its national state of emergency. In Greece, where fires still burn, 2 people died. Russia fired more than 70 missiles and some 280 drones at Ukraine overnight, killing at least 8. 1 cruise missile crossed into Polish airspace. The Senate postponed a confirmation vote for Attorney General and separately passed a resolution against a pardon for Ghislaine Maxwell, unanimously. And American strikes continued against Iranian command sites, with 3 reported killed. What to watch tomorrow? Whether the long end of the bond market keeps climbing, if the 30-year holds up here after a soft inflation print, that is a story about something other than inflation, and it will show up in mortgage rates before it shows up anywhere else. That's Thursday. 4 numbers, 4 directions, and 1 bond market that did not believe the good news. Rest well. We'll be right here again tomorrow evening to wrap whatever comes. Done by dark. Good night.